Right, let's start off by getting these lovely people to introduce themselves. The topic of this one, the PSD2, the inside story, basically. Ladies, obviously, first. If I could have your name, your company, and really what you do around PSD2 so everyone understands why you're on stage.
Yes, so I'm Denise Johansson. I'm a co-founder and CEO of Enfuce. Enfuce has built a platform for PSD2 open banking. On one hand, we help banks become compliant, so turnkey solutions for the whole life cycle of PSD2. So it's more than just publishing APIs, is to handle TPP validation, fraud monitoring, dispute management, and so on. And on the other hand, we also, with the same platform, will integrate all large European banks and creating a hub for both ISP and PISP and consumer and corporates.
Thank you.
Hello, hi everyone. Sorry for my voice is a little bit low today. My name is Francesco Simoneschi. I'm the CEO of TrueLayer. We are a startup based in the UK. We started 3.5 years ago. We are venture funded. What we do, we built a platform, an open banking platform that makes easy and accessible for fintech companies and fintech proposition to connect to the bank infrastructure and the opportunities of open banking PSD2. We are currently operating in the UK and in Europe, and very soon outside of Europe in other open banking frameworks, such as Australia.
And I think your PR company does need to get you a new picture because your beard's a little bit longer now. And it sort of puts 10 years on him. You know, I think we do need a new picture next time.
I should update that.
Yeah,
sure.
It doesn't look like it's grown in the last week, that's all.
Mine was 10 kilos ago, so...
Yeah, hello, my name is Pütz. I'm CEO of Luxhub. Luxhub is also a platform helping banks to get the PSD2 compliance, not only about publishing the APIs, but also we are doing the operational part. That's the onboarding of the fintechs for the banks, so they outsource completely their PSD2 compliance for the RTS part, for the APIs on us. Today we have 38 banks of 10 different countries. And we do also now a little bit aggregation, and we want to create tools for banks to foster innovation on their side.
Hello everyone, my name is Stefano and I'm the founder of Yapily. Very much like our friends at TrueLayer, we help companies to benefit from open banking without dealing with all the technical barrier that we remove on their behalf. We are a UK-based company, however we operate in many European jurisdictions already, both for data aggregation and also payment initiation.
So I don't know if you were all in here for the first interview. I hope you were. I know I've had various conversations with some of you about various things around this area. I'm interested, maybe as a first open question, of any comments on what he said, because I think he was incredibly open about certain things. You know, the honeymoon period is over, you know, source data and things like that. I have to throw it open to you to allow you to comment maybe on anything he said, because I certainly picked up some really interesting comments. But I think, would any of you like to comment any of them?
I have actually... I don't see that far, apologies.
I do think that it's time to state that the honeymoon is soon over. I'm not expecting anything rapidly to happen within the open banking in end of March. Like we are looking at all the major banks and we want to connect to them. They won't all be there by end of March, and I don't think...
He's saying he's going to be putting pressure on... He said they are going to be checking up on the regulators to ensure enforcement.
But it's like, for the regulators, it's tremendous amount of work to actually check. So I don't think that the regulators will have the capabilities to do it. But I'm not too afraid of it. All banks will get there, but maybe not by end of March.
Okay.
I don't know. Well, I welcome very much like the comment, because I think like we are here for having bank APIs and we are here for making PSD2 to happen. So that should be really the real direction. And we as a company, we always been behind this concept in the industry. And it doesn't surprise me, because we do a lot of work in a lot of the industry tables at the ABA level in the UK with the FCA, with open banking an implementation entity, and there's a lot of work behind, still like a lot of work to do, but clearly we are all in there to just allow this to happen, and so I believe that's absolutely the right direction. I hope that from a regulator standpoint, they just continue down this direction and look very closely and make sure that the banks are eventually going to comply in the right way.
Yeah, I
So
think
that's a lot on the API side. He also talked about data sources and everything else. Now, I know we've had conversations on that. I was interested in your comments regarding what he said on that.
yeah, but I also think it's how the regulator will control the APIs. He don't have the necessary knowledge, in fact, and don't have time to validate, especially for small banks. As the big banks will be validated, especially there are now some changes, even in Q&A, you need to send the name on it, and now with the account holder. So it's quite still a change in it. And I also don't believe that all the banks will be ready now for March. There are some guys think they are ready, but it's a question about are the API used or not, and it's only in the moment when a TPP implements really an API that we would see it.
What were your thoughts on his comments about the data, though? Because he was quite specific on that.
Yeah, it's about payments data at the moment.
No, I meant about using what for checking and source data. I didn't know, in terms of going back to the source data and stuff, and the EBA register being not a commercial offering.
Yeah, about validation of the certificates. Yeah, that's still a question. It's each different regulator have another view on it. So we have entities from 10 different NCAs, and so even the view of the different national competent authorities are different. And so it's not so, do you need only to validate the validity of the certificates? Does the TPP needs to be
That's not what he said.
Yeah.
So
but it's also a question about the passporting. Is a TPP passported in the country to use it, yes or not? And there's still open question, and it's not quite clear. What's also another point, there's no list about the banks which are exempted. It's really a huge problem for aggregators because they don't know if they can really be based on the APIs. So the bank needs to change the APIs in sandboxes 3 months before they change it in production, because if the banks don't have this exemption, you can change the API at each day. And it's really a leak of information is missing, which bank got the exemptions from the regulator.
So one thing I really loved, well, actually two things. One, the determination of his view on the fact that the NCA will be quite strict, and I hope that's the case. But what I really like, it was your joke about RTS and the fact that are supposed to be standard, but there are now 9 standards.
Minimum 9, because you can still do your own thing as well.
That's true. And I love his transparency and honesty in say, this was never like the intention. We never wanted to have one standard. It's almost like implying that he believed in social intelligence and the fact that over time, all of the standards will harmonize.
He believed in market forces on that. He was very clear. He believed, let the market decide on what the best solution is. It's us to do the guidelines, not the solution.
But for me, it was interesting because it's the first time I hear their view in the sense it was never the intention.
All right. Well, we should go back to really the topic here, but I had to give you a chance to comment on his statements because I thought they were quite provocative. And I've been asked to keep this panel discussion more on the payment side, obviously, because this is on the payment stream. So to that end, I have to ask you, Accenture's forecast that within, 5 years, 30% of online card transactions could move to PISP transactions. I'm interested. We do see in Holland, it was quoted earlier today in this session, 60, 70% of online transactions on Ideal, but it's interesting, only 45% of airline tickets, showing that consumers actually understand where the risks lie. But do we still think consumers will have the trust to move to this bank-to-bank? Or, and certainly in some countries, they're far more protected on card payments. Interested in your views.
I've been rude before, I don't want to be rude again.
You can start this time.
I think the Accenture was forecasting 30% by even 2020.
Yeah.
It might be quite aggressive.
Yeah.
But I'm sure that by the end of it, a significant portion of payment will happen via PISP for 2 main reasons. One, as we all know, e-commerce will introduce also strong customer authentication. So there will be some cases, especially on the mobile side, where doing a payment via PISP solution will be probably easier than some alternatives, like the call from home or other SCA solution. But also lots of tech companies are understanding the advantage of doing bank-to-bank payment and the economy that are playing. So instead of paying 1 or 2% for every transaction, potentially just paying for the API call. So they will push for this solution to be adopted. It's in their interest.
Yeah, I think that's not enough standardization at the moment to be really complete cards. And I think the other big point is about PISP APIs. There's no payment guarantee. And that's a huge point that cards have today, and all the reconciliation and all this part. So it's really a product that have now 20, 30 years. So it works. Now if you go back and we do directly bank-to-bank payments, first of all, it's really, I think the real blocker is the payment guarantee, that if I do a payment like through a PISP call, it's not a guarantee, it's just the initiation.
Yeah, absolutely, like a very bold prediction, but I think we have to look at a few things. Why PISP is going to be successful, and what are the elements of making PISP successful? And I will boil it down to speed of settlement, user experience, security, and cost. So now, if you look at the UK as probably like, as far as today, one of the most advanced countries in this sense, then you have real-time settlement, then you have strong customer authentication, which is done via app-to-app, which means you can use Face ID and similar kind of like biometric techniques to authorize a transaction. Then you have, of course, like cost is extremely like convenient for merchants and application to use this way of funding transaction. And because of strong customer authentication is actually like highly secure. So then you got all the elements, and now we see effectively PISP starting to pick up volume in the UK. Now, we should think at the rest of Europe and see where are those gaps and try to like fill those gaps, where there are the PISP APIs that need to step up in terms of consumer experience, introduce app-to-app, or is the settlement network that needs to move into more real-time fashion. But then when you have all those elements, I think you have the basics component for this payment method to thrive. And we have been an active, I would say, party into try to make this to happen. I think like we have like a very long way to go. But we should really look at features and product market fit and where PISP can start thriving earlier in the kind of adoption time.
You picked up on the cost aspect, though, because for retailers, there can be, or merchants, a very significant cost reduction.
Absolutely.
How much do you think is going to be the retailers pushing it to the market?
I think like it's substantial because PISP is virtually free. Then let's say that you go through an open banking platform or any other kind of like payment operator, then you, of course, like you're going to pay a small fee, which is most likely going to be a fixed fee per transaction. That's where like the industry is moving at the moment. And then you do the math. Like there's like a huge cost saving for, especially for larger merchants, which is where we see at least demand in the market as today. So it's definitely not brick and mortars. They may not feel the pain right now. But when you come to very large merchants, very large retailers, then of course they see their P&L and they see how much like cost of payment impacts into their margins, and then they have all the means, all the ways for incentivizing adoption and shifting volumes. And so then it boils down again into whether all the components are stacked in place to allow them to successfully convert a payment and do like the basic function of an e-commerce or like physical retail to their extent. And if those conditions are there and companies like ourselves are trying to bridge the gap as much as possible, then yes, things can actually work and cost reduction can be very significant.
If we first start with the question, do I believe in the Accenture's prediction? I think it's a really bold prediction. Like, I wouldn't mind it going that way, but I think it's too bold. I think that consumer journey and consumer trust is the biggest risk reaching volumes like that, because we have educated the consumers in how to do digital payments, who they should trust, and so on. So we have a long journey to educate the consumers in the right direction, and then of course we need the merchants to enable the option for them. And as Francesca said, then it needs to be a cost reduction. Why should they be serving a new option for the consumers? And what's driving them, of course, it's about fraud management and secure elements, but it's cost reduction. So it's, well, we'll see.
Okay, but then if I look at this, whose job is it to drive the trust of a PISP payment? Because, you know, is it, you could argue, is it morally or ethically right for retailers to promote this solution whilst all of the chargeback and protections are not in place that they are on cards? So you could argue it's not morally or ethically right to even for a retailer to promote this type of thing. On the other hand, as you said, it's highly cost effective, so they've got a bottom line incentive to do it. Or is it the PISP's job to educate people about trust, or the ASP's? You know, whose job is it to educate the consumer both about trust, but also, given the lack of regulation, you could argue, is it ethically or morally right to even be promoting these type of payments?
I think it's the whole ecosystem of payments. We need to educate the consumers together, because if you talk to a friend that is not within the business and you ask them would they trust or would they have the trust, or would they use the new services, they are like, what? No. So they haven't even seen the capabilities. They don't know what possibilities there are there. So it must be a joint effort to educate the consumers. And I think the biggest thing is for none of us to fuck it up. Sorry, the language. But if there starts to come stories out there where open banking, PSD2, is actually not doing as it should be doing, then the consumer trust will go downhill from there. So compliance and really security, that's important.
Sure. I think we have to get around a little bit of the definition of trust. What does it mean, trust? And maybe we can look at cards payment to try to define what is trust, like why consumers are trusting cards. And then again, you go back to the ecosystem, right? Because you can't imagine the cards ecosystem to work without like banks doing their part, and then Visa and MasterCard and Amex doing their own part, and then payment processor making sure that everything is safe and secure, and then retailers of course, implementing the right way. And then you can think about, okay, a lot of stuff can go wrong in every single part of it. And so now it's the responsibility of every single party to make sure that nothing goes wrong. And so it goes back to making sure that the banks are building a nice and decent user experience that streamlined that way of either paying or sharing data, and not maybe putting barriers and friction, or even more like creating bad advertisement onto those sorts of payment methods. And same thing for PISPs, like making sure that transactions are secure, explaining to consumers in a clear way what is going to happen. Same thing for retailers. The good news is that we have proven in the real world, in the UK, that once you put a PISP flow in front of consumers, then they trust that when it's done in the right way, and when the consumer experience is done in the right way. And so I believe that users, consumers are very receptive when products are fit for purpose, and then we all do our own part.
Yeah, I think that in fact it's about user experience. I trust also today when I have taken Uber, then it's paid, it's invisible payment, and it's more about education and to have the best user experience with payment today, and also the question about security and to be charged back in the case of. I think also we need to still remember that we are in the PISP case, we are in a decentralized system. So we are also dependent on the availability of the different banks. Today we have our credit cards, we have one integrator, we have, it's more easy to maintain, but it's in the PISP context, we are connected to the different banks to initiate the payment. And I think the trust can only come when the stability of the APIs of the different ASPSPs are there, and that's not the case at the moment.
So obviously, as we all said, this is a collective responsibility to make sure that users are educated. But my question is, who has the highest interest in this, in making sure that this is adopted? And most likely are the merchants. So it's going to be, let's say, the effort is going to be a lot on the merchants to educate the user that is a safe option, and maybe share also the benefit from them. Ultimately, PSD2 is designed to increase competition, but also make sure that everything is cheaper and more affordable for consumer. So if they don't take, as you said, just the bottom line improvement, but they share it with the user, or they use that to educate them, I think they should be doing a lot of the effort.
But none of you answered my question, which was, is it morally and ethically right for merchants to promote a payment solution which is giving customers less protection than other forms such as card payments?
I guess Francesco partially replied by saying the important is that you warn the user about what they're doing and you expose the risk, like with a disclaimer, basically.
So we give them a couple of pages of small page disclaimer written about this big, and then we're covered. That covers our moral and ethical obligation as merchants.
Wait,
okay.
Look at who's going to be likely the first early adopters on a larger scale. Like, we are talking about the largest merchants, the largest maybe e-commerce solution. And if you look at that, I would say trust in them is already quite high. And they already offer a pretty broad wealth of consumer protection, just like embedded into everything that they do. So think about, I don't know, Amazon. Like, I think the trust that the average consumers has in Amazon is already quite high. And it's high because they offer above and beyond protection on top of what even credit cards are doing. So on that side, I think if they, the way they eventually settle transactions, I think is secondary. And the way they drive efficiency internally is secondary to the fact that they have a certain standard, and this standard is matched.
But I'll tell you where my concern is. Amazon, Marks & Spencer's, Lafayette, the nice big stores roll out this solution. Customers have trust in them. Quickly, customers learn to trust PISP, therefore. And then various other merchants roll it out and almost abuse that trust in a payment system, fraud and everything else. And consumers, therefore, effectively, the big guys have because it's in their economic interest, have gotten to use a payment system, and now they're being misused over here. So you're creating a trust in something that doesn't have the protection. Is it morally and ethically right for merchants to do that?
Should I answer? I don't know.
Yeah. I think in general, we finally customers don't see if it's a PISP new payment model or another one. Also today we have different payment models, and in general it must be secure. And if you have a bad experience with payment, you go back to what you know, and it's cards, and it's really highly risk if the first PISP solution for e-commerce will come and they don't, and there will be a huge fraud scandal or whatever after some months. So I think the whole economy has this huge problem of trust, and also come on, it's the idea also of PSD2 is to foster innovation, yes, to get better user experience and to open up the market, but it's also to higher up the security for the final customer with the SCA part. And I think that's security. I cannot imagine really now to have payment methods which are less secure than cards today.
Okay, moving on from there. We heard the EBA said that, to your point, there is no single standard. There is a guidance, and they're very happy to let the market decide on the different standards or to use your own standard. How much of a hindrance to all your businesses is it, the fact there is no one single standard? Or is it a benefit to your business there's no one single standard because it allows you to do things differently? I mean, is this a pro? Is it a con? I mean, if you look at your businesses, would life be easier if there's one single standard across the whole of Europe? Or
yes.
Are you happy there isn't?
Yes, it would be much easier if it would be one single standard. But maybe it would prohibit future potentials when it's not too standardized. So looking at the past 6 months and coming 6 months, life would have been much easier. But then looking beyond that, I think we have more open possibilities when it's not too regulated, too standardized. So it's easier to go to open business rather than open banking.
TrueLayer, how much money would it have saved you if there's only one standard?
Well, for us is, let's say, beneficial, but I think we are looking at the wrong problem. The real problem around PSD2 is what PSD2 has been designed for, what kind of problem we are trying to solve. And again, from knowledge of being there in the industry tables, like behind the scene and try to then make PSD2 to work for real, then you can tell that use cases are is a regulation that has not been optimized for any specific use case in particular. Then we are all trying to derive use cases on top of that, which is great. And of course, this is where the innovation starts from. But the regulation itself doesn't optimize for anything in particular. I'm making a very simple example. Account holder name, what does it mean? It means that when I do connect my bank account, the bank is sharing who's the legal owner, who's the owner of the bank account through the API. Well, then it wasn't really clear in PSD2 whether that piece of information, which is key, was mandated by the ABA, was mandated for the banks to make it available to the TPPs. Now, why is key? Because if you are optimizing for a use case around, for instance, consumer lending, then, and you're using transactional data to make credit decision, then of course you want to make sure that you're lending to the right person that showed the right data, and you can attach a strong proof of identity. So I think that's the real problem, that you look at the text of the regulation and you can't really tell exactly what we are optimizing for. And maybe that's done on purpose, I don't know, but clearly for me that's the missing bit. Now, look at, for instance, the UK, where you have an implementation body that also decided to build a standard. Then by building the standard, they started asking themselves, okay, what we should optimize for. And so that definitely helped them driving the whole conversation. But I believe you don't necessarily need to start from whether you go for JSON or XML, or whether this is this field or this other, or this name or this other. You have to look at the use case, and you have to describe this use case and make sure that everything is in there for companies to run whatever business, whatever functionality that is derived from. And I think that's the missing bit, or at least we are all trying to optimize now on top of that.
Yeah. I think as TSP, technical service provider, we would be very happy to have a standard. We talked about 9 standards, but in fact there are 9 standard frameworks, because Berlin Group is not Berlin Group. We have 28 banks who have implemented Berlin Group, but there are 28 different implementations. So it's all about optional, a mandate, and it's not only about the standard, it's also the other bricks around, about the connectivity and all the technical stuff, which are different from each bank. Yeah. And so it's quite, at the moment, it's quite difficult. So each bank has its own implementation, own security stuff. It's a bit a mess. But it's clear if you would have one standard, it's, innovation, it doesn't foster innovation. It's quite clear, but in short term, it would be better to have a standard, but I think in mid and long term, we now know other types of data and functionalities. Yeah.
I totally agree, and you steal my answer, but having one standard doesn't mean having one implementation. In technology, we have plenty of standards, but then every tech company implements things in a different way. We will still have 6,000 different implementations for 6,000 banks. It will make things slightly easier, potentially.
Plug and play.
Plug and play will not work even with one single standard. And then implementation is not only upfront, it's also the maintenance. So all of this connectivity with banks need to be maintained. Every bank has different way of communicating with the market. So it would make things slightly easier, but it would not solve the problem.
So you still have a job?
You will still have a job.
Just a small remark. It's also, in fact, with PSD2, you need to send all the information that you have on your website, but each bank has different information of their website. So it's quite difficult to understand because also the web banking are not similar.
Okay. So I'm going to start getting you to look a little bit here in the future, because you've been talking about the number of banks you're implemented to, some of you, and where things are going. You know, there are, look at your numbers, anywhere between 6,000 and 9,000 ASPSPs across Europe. PI, EMI, bank credit institution, building society, etc., and everything else. How many years do you think it's going to be? Forget getting 100%. Let's say getting above 75%, till 3/4 of the market. How long do you think until? Is it 1 year, 5 years away? Yeah, how far away are we? Because you know, you can only deliver a service to your customers when sort of 70, 80% of the market is compliant, and actually giving you stable, I stress the word stable, reliable, efficient API access. How many years away do you think we are from that? Is it 6 months away, 3 months away, 5 years away?
So the question is, do we really need to connect to all of them to have the coverage? It's not a question of number of banks you connect to, but which banks you connect to, and do you have the right coverage that your clients need? I don't think any of our clients will ever ask us to connect to all of them. Most likely they will ask us to connect to 80 or 90% in each geography, and 80, 90% in each geography sometimes will mean 10 banks, other time 15 banks, other time, I don't know, 4 banks. So we will never reach the
different
point.
Clients, you know, you can have an SME-orientated service versus a consumer one versus a lending one. So, you know, you're still going to need to have, whilst you may not need to connect to all 80% of the market, you still need 80% of the market to have good, stable APIs to make sure all business cases can be met.
I am much more optimistic than you. I don't think it's going to be year away. The biggest bank in each country will be under significant scrutiny from their national competent authorities. So while maybe the tier 2 and
tier 2, tier 3,
tier 2 and tier 3 maybe are in the last 5%. So you asked me about 80% coverage, 85. We will reach that probably by the end of 2020 for most of the European country.
85% of coverage.
Absolutely.
Let's just make it not by number of banks, but number of accounts. You reckon by that point?
I'll bet you dinner on that.
Including e-money, wallets, and everything by 80, 85% by the end of the year.
Most of the country have a very high concentration in terms of banks. In the UK, the CMA...
But we're not just talking banks, we're talking payment institutions and EMIs as well.
Well, it depends if our clients will ask us for this type of connectivity. But at the moment, I don't envisage the need.
End of the year, right?
Yeah, I think it's probably mid next year, I think so. But what I see is, in fact, if you, as PSP, you want to offer an aggregator of payment institution to a customer, an SME or a bank, in fact, you want also to guarantee that it's working well. And this is quite important. And so you need to have also a payment account at this bank to test in real data, not only based on sandbox, because the difference between sandbox and production is horrible. And in my opinion, there will be regional or national implementation which guarantees really the good work, but that the APIs really works 24/7. They will test it, and there will be like a puzzle. So there will be national, regional champions in aggregation at the end. And I don't believe in the big idea that one aggregator will do all Europe, because it cannot guarantee that it works well in production, all the APIs, not only by pinging, but you really need to grant access to this guy.
Look, the only data point, and I think we have to look at data points, is the UK. So 2 years ago, 0 APIs in the market, then open banking started. 2 years later, we connected 2 million accounts. Not we as in TrueLayer necessarily, but like I'm talking about open banking. This is public data that's been shared on the second anniversary. So that means that throughout 2 years' time, and of course, like velocity is very much stuck toward maybe the last 6 months.
So you're saying 2 years?
2 years. I'm just saying 2 years too.
Huh?
2 years.
2 years.
So
no, I'm just
saying this is the data point that we have.
It's gone from, you see, 12 months, 18 months, 24 months. So I'm just seeing where's the next going on.
I'm not saying that Europe is necessarily going to be 6 months earlier or later. I'm just saying, okay, this is the data point that we have. That 2 years ago in the UK, no API. 2 years later, we have 2 million accounts connected. And that's a fact of life. And so now we should ask ourselves, what are the drivers of adoption in the rest of Europe? And I agree with Stefano, like, it starts with the largest institution, because even for ourselves, like, there are cases where very tiny financial institutions in the UK, they've been approaching us to say, okay, can you please, guy, test our API interface? And we just go back and we say, look, we don't have bandwidth right now. You have to wait a little while before, like, we can actually test and implement, because we have bigger fish to fry just at this very minute. Because, again, adoption goes through the largest institution first. So the right question to ask is, whenever it is that 90% of consumer and SMB coverage is going to be done through APIs. And I believe that we are, yes, within 12 months, 18 months, maybe 2 years away from having different level of competition. And even there, like, the story of the UK is that we started with maybe just current accounts, and then we added credit cards, and then we added saving accounts, and then we went from web authentication into app-to-app authentication. So there's a number of specific features that unlock certain driver of growth. And I'm very much a product person, so I can only look at that to try to answer this question.
Still, 2 years, roughly. So, as I said, 12, 18, 24.
I'm sorry, I need to be the pessimist here. So I like 3 years. To get that coverage.
Let's meet next year here.
And I do think that you should look at data points and look to predict the future. But UK is still a very well-developed country, and now we are talking about Europe as a whole, and we are talking about coverage of all players. In Finland, the authorities had said that yes, PSD2 applies also for technical accounts, so for anyone with a license to hold money. But rest of the Nordics even, the authorities haven't even yet said it out loud that yes, this applies for you as well. So they are not really doing that much to it. So first we need to have the statements. So will all need to cover for PSD2, and then they will take some time before they get there. So to get coverage over 80%, 3 years, will it be of relevance for us to get there? Maybe not, because then I agree. We're looking at those that are relevant to...
Okay. But I have 12 to 36 months, a decent spread here.
Should we meet next year again, and then we...
Yeah, it's going to be a fun on the estimate side.
And I would say that we are kind of like 6 months in, because my timer starts in like 14th of September 2019.
So he's now 18.
He's now 18. Yeah, he's now at 18. So I now have 12, 18, 18, 36. Look, with that great forecast, I'm going to call an end to this panel session. Thank you very much for your time. It's been a great session.